Hello, friends. Welcome to the Momentum podcast by Weekend Investing, the show where we will dive into the world of smart investing and personal finance. Each week, we will invite a guest, and through their lens, we will go through their investing journey, their triumphs and failures, their learnings, and try to implement those in our own investing journey with actionable points. So, let's see what today's guest has to offer. Good morning, Rajnish. How are you? Welcome to the Weekend Investing Chat. So, where are you from? And if you can give a brief background about, your maybe profession and what has been your outlook towards market. How long have you been an investor? And just this entire chat is going to be about you, your journey, your learnings, and what you would like to tell to fellow investors about the investing lessons that you have learned. So let's start with the basics so that people come to know about you. What has been your background?
So Alok, I'm based out of Pune as of now, and I'm an engineering graduate from Indian School of Mines. Then I've done my MBA from ISB Hyderabad, and with a major in finance in particular. So because of that, I've formally learned how to evaluate equities, fundamental investing, and all of that. Whatever formally you can learn in a business code. Uh, and I've been investing in market since 2011. So that's round about been 14 years.
Yeah.
Uh, and some serious money, I would say that I've been managing since 2016. So that will be around 9 years. I
Okay.
got introduced to weekend investing product in uh, 2020. So I came to hear you on a podcast with Anupam Gupta in a Paisa Vaisa podcast.
Okay. Okay.
Yeah,
Okay.
so once I heard you, your ideas made good sense to me. Then I went onto your website and checked, what all products are there.
We'll come back to that part maybe
Yeah,
later in the chat. But
sure.
initially, I mean, I would like to understand that you started investing, and of course, after your course at ISB,
Yeah,
you were introduced to fundamental analysis,
yeah,
probably
yeah,
valuation of securities. So
yeah.
post that, I mean, did you start a job or were you in your own business? What kind of a profession are you in?
So I was in the job. I have been working in real estate industry
Okay.
since then. And
Okay.
prior to ISB also had about 8, 9 years of experience. And prior to that, I was in metal and mining industry.
Okay.
Being an engineer and then learning, finance formally, so there is quite a bit of change, that you would also relate to. And
So, so this is very interesting that you have a very nice real estate knowledge also.
yeah,
So, from a perspective of like, generally we hear in the equity markets,
mm,
most financial analysts or most equity proponents
mm,
sort of beat down real estate as an investment that, one should not be doing it, one should not buy a house, one should
mm,
only rent a house.
mm.
So what, I mean, you being in that industry as well and having good knowledge and exposure in equity also. So what is your view about this debate? Let's get there.
So I think there are two things that are very, very important from a individual investor to differentiate. First, first house is a consumption item.
Okay.
Like you buy your car and you drive it, right? It adds to your lifestyle. And
Correct.
house, more than adding to a lifestyle, it adds to a lot of stability, right? Whatever happens in the world, you have got a home. You have to have a
Correct.
home. So first
Correct.
house has to be thought from a consumption item. It's not an investment. Now you
So,
buy a house of 1 crore.
so you're saying first house is a must.
It's a must, and it's a consumption item. If you buy
Hmm.
a house of 1 crore and it becomes 2 crore, 5 crore, 10 crore, it just doesn't matter because you're going to live in that house. That is
Hmm.
not your investment, right?
Hmm.
Beyond first house, when you invest in anything, be it residential, be it commercial, be it something else, that is the time when investment comes. And I think
Hmm.
from personal finance perspective, what I would suggest is, or that's my thought,
Hmm.
uh, that it is another asset class. Like equity is an asset class, gold is an asset class, debt is an asset class, real estate
Absolutely.
is also an asset class. So an investor has to look that this is also an asset class. And just like all asset classes have got a cycle, real estate also has got a cycle. Sometime,
Yes.
in 2, 3 years prices will double. Sometime for 5 years also prices may not move. So it's just like any other asset class. Another, I think, important part that an investor needs to consider is that how much should be proportion of one asset class in his entire portfolio. Does it
Yeah.
have to be like 80% or it has to be 20-30%? I think that's where people can go a little bit wrong with real estate investment, nothing else.
Right, right. My small difference in opinion with yours is that while it is a consumption item,
Mm,
I mean, it is also building a very large safety net for you in your life, in the sense that just in case there is that, Six Sigma event happens in your life,
mm,
and your house is worth 5 crores and
mm,
you have
mm,
nothing left, you
mm.
can downgrade to a 1 crore house and use that money to live your life. So from that
Absolutely.
perspective, it is silently building a safety net which is
Yes.
away from your things that you do otherwise, and
Yes.
potentially it is out of the reach of your being able to destroy that capital. Like some people can destroy their capital by doing all kind of leverage games and this and that. This is
Yes.
one place which it'll be very difficult for you to even destroy it even if you liked. So
Absolutely. So parallelly, it remains a store of wealth also.
it is
Yes.
storing value, and I mean, I personally think that it is a part of your overall allocation, and despite you being living in it, if needed, it will come in handy in terms of that capital being there.
Absolutely.
uh,
I would agree to that. Yes.
yeah, I mean, this is something that potentially even business schools are not, in your ISB, I'm sure, the focus would have been more on equities and at most places, they will teach you how to do securities analysis. They will never
Yes.
teach you how to do real estate analysis. What is the a sort of role of gold in one's portfolio.
Yeah.
So
Yeah.
those things are conventional, and I guess that's how that's going. Anyhow, coming back to you. So when you started your second innings post your MBA, how did you approach the markets? What was your sense of, should I do regular investing? Should you be doing direct stocks, mutual funds? Initial years, just walk us through what your journey was, as your family probably was expanding at that point of time. How did it go at that time?
So I think the initial few years for every any investor is is a little bit of a random walk,
Hmm.
and if you happen to be a finance graduate, you think that you know everything, which is not. The real learning comes when you put your money in the market and you see up and downs and cycles of the market. So initially, I thought that all right, I know discounted cash flow, I can make the model, and I know this, I know that. I can read research analysis report. I can read 200 pages of balance sheet. I can do the numbers, and I've done that. I really, whatever investment I was doing, and we formally learned value investing, a lot of fundamental investing. So, on whatever criteria, like I shortlisted stocks, I would read their balance sheet, do the numbers, which also, it works. It's not that it doesn't work, but uh, the the problem where it comes, it's a extremely specialized job. Even the people who do it as a profession, who do it, they are also specialized in a few industries. It's not
Hmm.
that they are broad based, and
Yes.
unless you can do it across the spectrum, it will not yield good result, because at
That's
one time, one thing would be running, at some other time some other thing would be running. You can
exactly.
be master of one, but you cannot be master of all the sectors all the time. So that's where, that's a limitation of it. So
That's a
I
very good point. That's a very good point, because you need to really go very deep in that industry. Like they say, just doing scuttlebutt is not going to get you there.
yes,
Extreme nuances of that industry needs to be known, and
yes.
the gamut of industries, the gamut of niches that are there. I mean, unless you have an army of researchers with you, you can't really do anything there.
Yeah, so on it has its limitation, because beyond a point you won't have the bandwidth to study so many industries simultaneously, and it needs quite a lot. If you have to just read one balance sheet, it'll be anywhere between 150 to 200 pages. It'll take you a one entire weekend just to go through one balance sheet, and then doing it.
Especially if you are a busy working professional.
Yes.
I mean, even if you have passion to read this, and you are a passionate fundamental investor, As a busy professional, I mean, which job gives you time to, read 150 pages in a week?
Yes,
So, from that point of view, it's extremely challenging. And then if
yes.
you do a cursory job of that, then,
Yeah, you are doing disservice to your capital then.
yourself actually. Yeah.
Yes.
Yeah, that's true.
So,
That's true.
so I went through, that
Hmm.
part of, reading analyst report, doing your own research, making DCF models and all of that.
It was
Uh,
2012.
Yeah, this was initially, 2011, 12, 13, those periods.
Hmm.
Uh, then I, moved to mutual funds. So these are the things which were happening in parallel. So I had some direct equity, I had some mutual funds. So this was going on. Then in around 2016, I had got, by the time, some serious money. Like it ran into several lakh. It will not be like 1, 2, 3, 4 lakh, but it went into several lakhs. So when the corpus is a little big, the money managing money become a little bit of serious job. So that was going on. I would say, in between I got good returns, in between I didn't go return. It was all, market cycle. In 2018, when reclassification of equities happened, and
Hmm.
suddenly, the mid and small cap just crashed, which was just not expected. And then you see, uh, the market is not moving so much, but your portfolio is going down at another level.
Hmm.
And these things always happen. So going through those market cycle, then again there are some learning that, I need to diversify
Hmm.
across, let us say, classes of mutual funds also. You need to
Hmm.
be, you cannot be, in one segment or one
Yeah.
sector or few sectors like that. A broad-based diversification is
By
needed
this
because
time, 2019, had you invested in your own house?
I had some real estate investments.
Okay. Okay.
Not an own house, I still don't have, but I had real estate investments, which are purely investment only. So I was not fixated in one place, which I'm still not. So I haven't had a house to, live on my own, but I have the capital. I can buy the day when we want. So that has not been a problem for me, but a conscious decision that I had some real estate investment
Hmm.
and I decided to stay on rent. So I remain flexible to move across cities.
Okay. Okay.
Yeah.
Okay.
So, so that's how it was, up and down journey, getting some time
Direct
return.
stocks as well as mutual funds.
Direct as well as mutual funds also, and very little diversification in terms of asset classes other than a little bit of real estate investment that I had. So I didn't have
Okay.
much of
Maybe
debt
like
exposure.
80% into equity.
Yes, yes, yes.
Hmm. Hmm.
So very little gold, hardly anything, and hardly any debt. That's how it was. So then it comes to, weekend investing journey. That's the time when it started, and
Which
that's
year
the
was
time.
that?
So it's a story to be told, really. I'll tell you.
Please
I
do.
started I started in February of 2020, and I remember the date. That's 10th February,
Okay.
2020. Okay,
Just before COVID.
and market Nifty was at near its all-time high. I think it was 12th February or something. It was 12,430. Nifty was at that level. I
12,000.
remember this. The
Yes, I
peak of
remember that.
market, I took this, and I started with your MIMT all cap. So that's a diversified across capital,
Yeah.
and that I thought, very, very balanced portfolio to enter into. At that time, the products were also limited
Yeah. Yeah.
from your end. It was this, then MI25 was there, all time high was there, and then there are two separate portfolio, MI30 and MI50. So these five were there, and I thought all cap is very, very balanced. I'll start with that, gain some experience, and then I can get into it. Now, the what happens in another, 6 weeks time, the market tanks by 38%, right? And the experience that I had that time is totally changed my views. Now, the way MIMT all cap works is, when this collapse came, my total portfolio was substantially down. But in all cap, whatever small capital I had, I don't remember exactly what I started with, it had moved to 80% cash.
Hmm.
It had come down 20% from the peak.
Hmm.
Whereas my other portfolio was down more than 40. Because typically what happens when index is down by 38%, maybe your portfolio will be down 45, 50,
Easily.
60%.
Yeah. Easily.
That's what
Easily.
happens. So my portfolio was substantially down, and I see that this is some kind of magic, that I'm just down 20% in this one portfolio, which hasn't happened in other thing. So this is one. No, it's still, everything is down yet. And
Hmm.
during that time, because I started following you very actively, whatever, reports were coming on your website, and whatever videos were coming, blogs and things like that. I was reading everything. I've been an avid reader, and there are a lot of people like me who read.
I
But
just want to interrupt you here that you were trained for securities analysis, fundamental analysis. You did
yes,
balance sheet reading. How did
yes,
you convince yourself that you will, get into something where we are not even going to look at those things?
yeah. So it was a little bit of a hit and trial that let us try this thing. Another
Okay.
thing was that I had gone through your website, and then
Hmm.
whatever past returns were available that time. So I put
Hmm.
them in an Excel sheet. I've seen, what were the returns over that period, what are the returns on Nifty on that period. I did that comparative, and I saw, okay, it is definitely, beating the index. So I thought, okay, let's take and start with one product with certain capital. Let us start from here. So it's like, something like you invest in mutual fund. It is something of that kind, but not in form of a mutual fund. It's a curated portfolio. Let's start with that. I'd seen the performance based on the numbers that were available at that time. So this is one part. My portfolio tanked, but my weekend investing portfolio, was in a much better position. Though it was also still down, but still way much better. And then you spoke quite a lot about gold. I started following you on Twitter. You had shared some video at that time. It was a long form video, anywhere between, I think, half an hour to 1 hour, maybe from Gold Council or something. I watched that video entirely, and then I started to think that, gold is the real money. Till that time, the typical thought was it's just a commodity. At the best, it will give you dollar hedge. It's just about that. And for past almost 8-10 years, gold was range bound. It was, let's
Yes.
say, some 35,000 rupees for 10 gram, and it remained in that range. But then there was another way to look at it. Then I started from that March month itself. I started further investing in gold, and I kept on learning. The main learning that I've taken on the gold is, a gold is the real money, and the reason it is the real money, every central banks holds gold,
Holds it.
and they
Yep.
keep on buying more and more gold. They are not
Correct.
holding silver, they are not holding crude oil, they are not holding any other commodity. All
Absolutely.
central banks, they hold gold and they keep on buying. Now, if the another way to look at is, effectively central banks can print as much money as they want.
Yep.
That's the fiat money. By holding gold, the central bank themselves build a hedge
Yeah.
against their own printed money.
Correct.
And all these asset classes, be it equity, be it gold, be it something else, I think the one should never look at 1 year period return. That extremely misleading. You have to look at 5, 10, 20 year and maybe more, those kind of performances. Then you see over a longer period how that individual asset class has performed, and how those multiple asset classes, when you combine them together, how does that form. Then market also started to keep coming up, that my equity portfolio, of course, it became better, and within that 1 year I subscribed to more of weekend investing product. And over time, what I did is I moved all my equity investment to momentum portfolios. That
Oh,
is what I
great.
did.
Absolutely great.
I'm subscribed to, I think, 5 6 of your product,
Okay. Okay.
and
And
some other.
gold you were buying every month, every now and then you were adding gold.
I was buying gold, but because I was listening to you more, and I have a
Mhm.
little bit of analytical bent of mind.
Yeah, yeah.
One very good thing that I learned from you is that there is a ratio of equity to gold,
Mm.
and that can be very advantageous. So I've
Mm.
just put it in a spreadsheet, a formula.
Acha.
Gold divided by Nifty 50. If that ratio comes below zero point 0.3, it will
Ah,
show buy gold. Otherwise, it keeps showing don't buy gold. So
very
whenever,
nice.
and that ratio comes very few times.
Yeah, yeah.
Maybe it will come once in few years.
Yeah,
It'll
once in
appear.
a decade kind of a.
Yeah. So whenever that happened, I bought gold. Now this
Mm.
year also, when Nifty was at peak around 26,000 and gold has not risen so much, again that came, and I had to have that this much I should have in gold. I bought that, and you will not believe, Alok, as I speak now, my IRR on gold is 24%.
Wow,
And
fantastic. Very
even
nice to
before this recent rise, and I have all my numbers in some spreadsheet, and I have XIRR of each and everything, because I formally learned. I've done this in my job. I know what it means. I know how to calculate it.
hear.
And my IRR on gold, even prior to this recent rise of 12 months, it was at 18%.
Yeah.
And
Yes.
that one ratio, that equity and gold, if it is that ratio, that is the time to go overweight on gold. That has really worked in my
I'm feeling so nice hearing, all this great knowledge that you have acquired. And a lot of people hear videos, and but very few will actually go ahead and implement them, understand that properly, and change their own mindset to implementing that. So hats off to you. I mean, I'm extremely happy to hear your success story on gold, and that the fact that being a fundamental investor, you were able to appreciate the momentum way of investing and gradually moved all your monies towards that. So now let's come to some lessons or some mistakes of your journey, that some of the biggest mistakes, if you would like to share from your investing journey, and what lessons you would give to fellow investors, younger investors who are coming into the market to look out for.
see, I have made every mistake that every investor makes.
Okay.
It can start from very simple thing like not having enough diversification. It can start from thing like that averaging on the way down. It can also be things like that where you have, let us say, anchoring bias based on a price that recently some stock, oh, it was at 2000 rupees, now it is going to 1000, someday it will come to 2000. Something that has gone from 2000 rupees to 1000 rupees, it can actually go to zero.
Yeah.
That's the that's the fact.
Yes.
That's the thing about equity. And something
Correct.
gone from 2000 to 1000 rupees, it can remain at that price for very very long period, 5 6 8 10 period, and there is an opportunity cost to that. And even if you want to be not very aggressive, and you can just look how much nifty will give you in that time period. So should one take those kind of bets? And I think momentum does it very very beautifully, that it stays with the strength. It will remain in a stock as long as it is rising. Till it, comes from the top, that is the time it takes the call of exit. Uh, so those are, the learning in terms of making the mistakes. And the beautiful thing about momentum investing, and this is the something, we formally also don't learn in our
Yeah,
finance
nobody
course.
will
I've
teach that.
taken a lot of courses on investment and analysis and these kind of things. There is a whole lot of, and maybe some things might have changed in recent years, that can also happen. We learn a lot on the fundamental analysis, value investing, and these kind of things. But there is very little or almost zero, at least in my time, on the technical part of it. In one of your video, Alok, you had said that सुजलोन अगर छोले भटूरे भी बनाए तो क्या फर्क पड़ता है. And that's about it, because price is giving you all the information.
Yes, yes.
Every information that is there in the price, how it is moving, it is going up,
I
it is
think we
going
like
down, is there
philosophy.
volatility, is there liquidity. It can just take care of everything, all the information, and then portfolio can be built on that. And you can have
Yeah.
entry and exit which are totally quant based. You just look at the numbers and you don't need to look at anything else. So I had all this learning that typically that investor make mistake. And what I've come to learn in this period in terms of I think from younger investor, I would say you're not going to die tomorrow. That's a rare instance. You're probably going to live, if you are in 20s, you have another maybe 30, 40, 50, 60 years further to live. So you are in this for a very, very long run. So when you
Very
look
good.
back at something, look back at the performance of something, look back for a long period. 1 year, 2 year, 3 year, just cut it out. It doesn't matter what has happened in the last 12 months. Because when you are investing in a product, you are investing for next 10 to 20, 30 years. So look the past performance, which is 5 year and beyond. That is first. Have enough diversification in your portfolio. Another important thing, the best learning will come when you are into deep drawdowns. You will now this time, lot of investors will learn that how to diversify their portfolio. This time,
Yes.
right now, as we speak, last 6 months I've told a lot of people what is the importance of diversification.
So
So
when
every
you
a lot of investor will learn, and best thing is there is always a time. If you think that your portfolio hasn't worked the best, you will always learn and you can always improvise it. And
Hmm.
investing can be extremely simple. You don't need to have very very detailed Excel sheet, reading too
How
much.
much time do you spend on investing every week?
Now actually it's very little. if you just rebalance your portfolio weekly, monthly, and that's about it. And that's as far as equity is concerned. And now I'm not managing any of my equity on my own, mostly it's through momentum portfolios. And then there is managing at the portfolio level where you have different asset classes. So for all the investor, I would say that when you have fresh money coming in every month, right? You have your salary or your profession or your business that somebody could be running. Every month you have some money available which you're parking in your investment, and whatever target allocation you have to different asset classes,
Hmm.
whichever asset class is lower than your target, this thing, just keep parking money there that time. Let's say your
Very
gold is on the lower side, invest in gold. Your equity is on lower side, invest in gold. If somebody is following this kind of portfolio, so what will happen in this time? Gold will be on higher side, that
Hmm.
will be on relatively higher side, the equity will be on lower side, so money will automatically start going to equities when equities are underperforming, and this will give a little bit higher IRR. And on this I
Yeah.
would tell Alok one more thing, it will
Yeah.
blow your mind totally. So
Okay.
I started with MIMT all cap, right? My money came in different stages. I took out money also from it when it substantially
Okay.
increased from the recommended portfolio size. My IRR on that is slightly
My
over this
God.
5 year and a month, so
Amazing.
it's about time also, because 5 year I just stayed there. And another thing, never override a system, because sometimes we think, we are too intelligent. Oh, why Alok has not bought this stock, or why he has kicked out this stock, I believe in this, then they try to override. Do not override the system. Trust your manager. If you don't trust your manager, then don't invest in him, with somebody else. But once you are
Exactly.
with somebody, just run the system, don't override the system. And I think this
Beautiful.
overriding, this over intelligence, neither you are here nor you are there. If you have so much problem, then just invest in it. And a way to look at it is, in any index, be it here, be it US, be it anywhere else, every index is a quant. Is what is market capitalization, what is free float, and based on that weights are decided. That's how
All
an
indexes,
exit
all indexes are doing that. So all indices are also, pseudo momentum portfolios, which are
Absolutely.
rebalanced every 6 months.
And they were, you look at any index over 20, 30, 40, 50,
They
100
keep
years,
going up.
wherever the data is available. And that's how it is. And that's
Yeah.
how, if that quant can work, where rebalances in 6 months, now something that will do rebalance in a quarter will perform better. Something that, rebalances in a month will do better, because they will exit their underperforming stocks at much prior than the market has taken hit. So quant, just if you see index working, that is a proof that quant works.
So Rajnish, when you look around your, let's say in your office place, your friends, your colleagues, what do you find? I mean, people are, over a period of time, how are they managing their investments? Are they getting really frustrated about, the uncertainty? Um, and when you talk about momentum to them, what is their reaction? I mean, just share if you do have these kind of
I think
conversations.
I think a few people with whom I've spoken about momentum, it's little hard for people to understand
Hmm.
what people do. And all this is because of the biases that they have got from their experience. So typically, what people will do, oh, the stock is now up 30%, it will go down now, let us just exit. But
Hmm.
something that has gone up 30%, it can go up 100%, it can go up 500% also. And that, when you tell it to somebody, people are not ready, because they've burned their fingers, and they'll say something that has gone up, it can go down, let us exit before it comes down. And momentum, the way it does is, if something is going up, let us just ride it as long as we can ride it. And
the
they
key
start.
challenge the key challenge is to convince people that this can work. I mean, despite the results, despite people's experiences, people just don't want to believe it.
Yes. So for that, you have to spend some time. And I think I had luck on my side, and apart from a little bit that, I was very sticky also, because the time I subscribed to your first product, market came down, it came up. So I saw that cycle.
Hmm.
And, in between also, I think between uh, I think October of 21 to 22, again, the market was, it was in a zone. Previous all-time high, it remained in a zone for about year and a half, and in between it was 15% down from the top. And while
Yes.
that happened, I think the index was down 15%, and this all cap
Strategy was
portfolio
good.
underperformed the index by another
Yes.
10%. But
Yes.
it again came back. And the beautiful thing about this momentum strategy is, See, all the money can be made only in bull runs, right? When a bull run comes, the momentum strategy, they just go roaring. There is no stopping to them. They just beat the index so handsomely. The gap is just huge. So I've seen, I've seen the down cycle, I've seen in a stagnant market, and plus there is no strategy which will not underperform index in a certain time frame. Otherwise, it will be like a god strategy that nothing happens to it. That is not the case. So it has its ups and downs, but one has to look at a very very long time frame. So from my own investment, as I'm saying that I've been invested in this strategy for 5 year and a month now, and I've told you already that that kind of magic staying for a long run in momentum strategy.
Wow. Wow. So amazing insights, Rajnish. I mean, I'm so happy to meet you and to hear your story. I'm very motivated that, some of our subscribers are so knowledgeable and they have picked up so much from our, thesis on gold, and that has improved their portfolios so much. The XRR that you mentioned are just, beyond imagination. So all the best to you, and I'm extremely pleased today to hear this testimonial of weekend investing, and I just hope and wish that you continue to prosper, and we'll meet again on someday on another channel.
Definitely, Alok. Thank you so much, and you have played a very important part in modifying my portfolio. And I really hope that you come as a guest speaker at a lot of MBA schools. That early on students get to hear uh, what these kind of
Surely, surely,
quantitative
surely.
momentum based investing do. And you have the record, you have the proof how this performed. There are a lot of people who should get to know this.
All right. Thank you so much, Rajesh. Thank you for tuning in to another episode of the Momentum Podcast. I hope you found today's discussion to be insightful and inspiring. If you enjoyed this episode, please do hit the subscribe button and share this video with your friends and family. If you are a veteran weekend investor and you would like to be on this show, please fill the form below and our team will connect with you. As always, let's keep learning from one another, and we will see you in the next episode. Till then, take care. Bye bye.